Good afternoon. Welcome to our first UOBAM Robo-Invest webinar. A big thank you for spending your lunchtime with us today. I'm Amy, a member of the UOBAM Robo-Invest Customer Success Team. Today, I'm just like one of you, new to a robo-advisor and keen to learn more about it from our invited speakers. Here are some of the housekeeping rules before we begin. Chat box is available for you to post questions or raise any connectivity issues to host. Polls will appear on screen for your selection and results will be shared. In total, we have 3 polls. Click on the Q&A icon to ask questions throughout the session. Click the like button to upvote the questions. Towards the end, scan the QR code with your mobile handphone to access the feedback form or click on to the links available in the chat box. So today's agenda, we have lined up for you. We shall cover a quick introduction of UOBAM Robo-Invest by Roger Link from the Customer Success Team. Followed by that, what is Robo-Advisor and how it works will be done by, presented by Damo Sogento, our Chief Investment Strategist. Roger will also cover the key features that we need to know, and lastly, the Q&A session. To kickstart the quick introduction of UOBAM Robo-Invest, let's watch this video together.
In forging a sustainable future, we are also glad to work with our like-minded partner, Singtel, to help their customers invest for both profit and purpose. We will continue to expand our range of services and solutions and to work with Singtel to make investing more accessible and sustainable.
We hope to democratize finance by harnessing technology to offer an inclusive suite of high-quality services. And this new investment service delivers on our commitment to make it simple, affordable, and convenient for Dash customers to manage their finances and build their wealth.
Our collaboration with Singtel represents a step forward in the way we offer robo-advisory solutions to consumers. By embedding UOBAM Robo-Invest in the mobile wallet, we are providing Dash customers with easy access to professional investment expertise and experience that we have built more than 3 decades.
The UOBAM Robo-Invest on Dash is truly a partnership of like-minded people. In partnership with UOB Asset Management, we strive to bring high-grade global investment to customers, which is easy to access from their mobile and at an extremely affordable price.
Thank you, Amy, for the introduction. I'm sure the video has provided a very good overview on what exactly is UOBAM Robo-Invest and what the product is all about. For the members in the audience today, UOB Asset Management is a multi-award-winning asset manager and financial advisor for over 30 years of investment expertise and over 38 billion worth of assets under management as of 30th of September 2021. We are extremely proud that via our Dash partnership, UOBAM Robo-Invest is Singapore's first robo-advisor on a mobile wallet. To deliver maximum value, we have also created sustainable investing solutions exclusively for our Dash clients. Before we start, let's kick off with a simple poll for our audience. So we'd like to find out whether are you currently invested with UOB AM Robo-Invest? Please feel free to answer the poll. Okay, cool. I guess from the crowd today that we're having, most of us have not invested with UOB AM Robo-Invest. That's fine. We will actually go through what exactly a robo-advisor is all about and also the key features of it. Before we start, I would like to invite Damo to share with us a little bit of how the markets have performed over the past 2 months or so and how it has impacted our robo-invest portfolios. Damo, please.
Thanks, Roger. Good morning, everyone. Glad that you could join us in this lunchtime webinar. Okay, basically, I think what we have seen in market in the last couple of months is really driven by I guess, one thing. Really is about central bank, especially the US central bank, which is the Federal Reserve. I think since late last year, there was the Federal Reserve actually started to tighten monetary policy and talked about interest rate hike or hiking the interest rate coming this year. I think that has sort of spooked the market a bit. I think what we saw was that bond yield went up significantly in January, and that basically triggered market volatility even in the stock market. And we saw that market correction. I think on average, most of the developed market will have corrected about 10% in January. And I think recently, of course, geopolitical risk came into the forefront as well, especially the situation in Ukraine that kept market really at the edge of their seats as well. So that's really two major events that's really driving what we see in terms of market volatility. And how does the Robo-Invest actually react to that? The short answer is that we don't react very much because the portfolio is really designed for the medium to longer term. And usually, especially for geopolitical risk, it has really very little impact on markets in the long term. It may create short-term volatility, but in the long term, it generally doesn't affect the long-term performance of market. As for interest rate, basically, with that interest rate, what we have seen is that on the portfolio front, now that yield interest rate has actually gone higher, if anything, it makes investing in bonds relatively a little bit more attractive. We have not made much amendments and we have not made much changes, but I envisage that at the next rebalancing, we may actually end up rebalancing the most portfolio to hold a little bit more bonds now that with the higher yield and a higher interest rate, bonds actually look slightly more attractive. And of course, that also compensates the higher volatility in markets.
Thank you, Damo. I guess right now everybody is fully aware. I mean, in terms of how the markets have performed over the past 2 months, everybody is feeling a little bit jittery of how the central banks have been acting on, like what you mentioned. And from the audience in the crowd today, being invested into Robo-Invest itself is actually a portfolio, and as what Damo have mentioned, is also looking at the mid to long term kind of a basis. No doubt the portfolios will be affected by the volatility, but we stand firm in that sense, from our overall methodology as well in terms of how we structure the portfolios. So right now, since we are updated on what has happened in the markets, I would like Damo to share it with the audience today. For those who have not started about Robo-Invest and to share with us what exactly is a robo-advisor and how it works. Damo, please.
Thanks. Sure. Great that most of you have not have any experience on robo-advisors. I think this is probably a good introduction. What really is a robo-advisor? Robo-advisor, I mean, boiled down to its simplest form, is really a computer program or computer algorithm that basically design your investment portfolio for you based on usually two things. One is, of course, your risk appetite, your risk tolerance, and secondly is in your investment horizon. So that's usually the kind of the algorithm that basically designs a portfolio for you with minimum human intervention in the portfolio, right? And the good thing, of course, is that when you have minimal human intervention, there is less emotion involved in the investing process. So the first robo-advisor actually was launched in 2008, a company called Betterment, and started taking money from investors in 2010. So it was launched after the great financial crisis, right, the GFC. But the principle behind it actually, or the tool itself, has actually been around much longer. It's just that it used to be used by financial advisor to design clients' portfolio for them. But with robo-advisor, what it happened is that it leveled the playing field between investors and financial advisors, democratizing the playing field in terms of now consumers and investors can themselves use the tool to design their own portfolio. Right? If I go to the next slide, the principle of robo-invest advisor, most people, the basic principle behind it is really something called modern portfolio theory. A lot of robo-advisor will tell you that they are based on Nobel Prize winning technology. This is the Nobel Prize winning technology. Basically, this theory won a Nobel Prize in the 1960s, and basically it says this: there is a best portfolio for investors at various level of risk. Okay, what do I mean, right? So, and you see a lot of dots and you see green lines and you wonder what those are, right? Imagine that you start with a portfolio of 100% in stocks, right? If you add 100% in Singapore stocks, for example, there is an expected return and an expected risk, or what we call volatility, in a portfolio that is 100% Singapore equities, right? It's represented by a blue dot in there. Which blue dot? We don't need to know for this instance, but it is represented by a blue dot, meaning that it's a return and volatility. On a return and volatility chart, it is represented by that blue dot. Right now, if you invest in 100% global equities, it will be another blue dot, right? But you say, maybe I want a bit of Singapore equities, a bit of global equities, it will be another blue dot, right? And then if you start introducing some bonds into the portfolio, it's represented by a blue dot. So imagine that you have various combinations of investment portfolios, right? It will all appear as blue dots, but after a while, you realize that it will actually reach a stage that you cannot put any more blue dots. And what we see as the outer parameter of all these blue dots is what we call the efficient frontier. Basically, it means that along this green line, a green curve line that you see, are actually the best portfolios you can create, because it gives you, at any risk level, it gives you the highest return, right? Anything below that, you are actually, it's what we call suboptimal, meaning that for the kind of volatility or risk, you are not maximizing your return. So the green line is really the efficient frontier. And most robo-advisors are basically trying to find that efficient frontier, right? So that's really how robo-advisor, or the basic principle of the robo-advisor, trying to find the best portfolio for you for the kind of risk that you're prepared to take, right? If I go to the next slide. So basically, the robo-advisor start by assessing your risk appetite, and then ascertain your investment horizon, and then design the appropriate investment portfolio based on that. right? And once you have sort of funded your account in the robo-advisor, it will start executing the trade and build the design portfolio for you. Excuse me. Builds the design portfolio for you. And all this happened without you having to give any further instruction, right? It's all automated. That's where the robo comes in. And then from time to time, we would rebalance your portfolio to keep it optimized. What do you mean by rebalance? Okay, assuming that you have a portfolio that says you invest 60% in stocks, 40% in bonds, right? Over time, stocks tend to generate higher return, and over time you might end up with a portfolio that it becomes 65% in stocks simply because of the appreciation and 35% in bond. But that is not what the intended portfolio for you is, right? So rebalancing means that we would sell some of the stocks in your portfolio and reinvest in bonds so that it goes back to the 60-40 that was meant for you based on your risk appetite, right? That really is what rebalancing is. If I go to the next slide. So how we build it, we basically start by defining suitable asset classes. So within the asset classes, there will probably be global equities, there's Singapore equities, there's Asian ex-Japan equities, and then there would be things like government bonds, whether it's Singapore government bonds or US government bonds or Asia ex-Japan corporate bonds and things like that. We define the suitable asset classes. And then after that, we select the appropriate investable universe, meaning this is a curated list of exchange traded funds or unit trust to deliver the targeted risk, the targeted return for the risk level. Okay, so basically it means that if we say that in a good investment, a good asset class is Asia ex-Japan equities, then what fund, what exchange traded fund, what ETFs or what unit trust is the best vehicle to deliver that sort of risk return profile for Asia ex-Japan equities, right? So we select the investable universe. And after that, we put into the algorithm our proprietary capital market assumption. Okay, a capital market assumption is simply a return and risk, expected return and expected volatility assumption for each asset class, right? So we basically put in our proprietary capital market assumption because we believe that this is really important and why we have to input our own capital market assumptions. The reason is this. Most people take the capital market assumptions of a textbook. For example, what is the expected return for equities? And most of them will tell you is 8% over the long term. That's basic textbook answer, right? We don't. We basically say, hey, if today stocks are expensive, equities are expensive, then over the long term or medium to long term, the expected return would actually be lower, right? So it might not be 8, it might be more like 6% return. That's how we tweak that textbook number into something that is proprietary. And why is this important? Simply, it's important because if your capital market assumption is wrong, then the algorithm would make a wrong allocation, right? If equity return is high, it looks more attractive as an asset class, and it may over allocate to this asset class than what the real situation calls for, right? So that's why we have a proprietary capital market assumption, and we think that that's really important. This is also where we put our investment heritage, and we have been investing for 30 years into the robo-advisor. After that, we implement investment constraints and optimize and create the portfolio for clients. The next slide. Right, as I mentioned, what differentiates us from others, the first thing is really our proprietary capital market assumption. This is really important, as I mentioned just now. If we get this wrong, that we think that the portfolio will allocate to the wrong asset classes. Two, that we actually do careful ETF fund selection. This is again important because if in ETF especially and in funds, what we are worried about is that these instruments need to deliver the capital market assumptions. It needs to deliver the return that we expect from this asset class. And if we choose the wrong one and it doesn't, then basically our algorithm, we can have the best algorithm and the end result for the portfolio would still be subpar. That's why we actually put in a lot of efforts in terms of the ETF and fund selection as well. Right? So this is a brief introduction to what robo-advisors are and how it works and how ours are different from the others that you see in the market. I'll hand this over back to Roger to take you on a journey in terms of the features of the UOBAM Robo-Invest. Over to you, Roger.
Hey, thanks, Damo. Thanks. I guess that has been a very interesting discussion in terms of sharing on how a better understanding of how a robo-advisor works, and most importantly, in terms of our differentiation factors as well, our heritage that you mentioned about being 30 years in the industry and putting in that into a proprietary CMAs, and in the best interest of our clients as well. So before we start going into the features, probably let's pull up a second poll of the day, and to the audience is that how likely are you going to invest in 2022? Given the current market volatility. Yep, I can see that most of us are still willing to invest in the market. I mean, that's what they always say, right? During the situation, in a crisis situation, or even when the markets are down at this moment, there's always opportunity in the market depending on the risk appetite, depending on where you are looking for in terms of returns as well. So probably just one more question to Damo is that as you are aware, Damo, recently we have just published our first part of the Mega Trends report. And before I go into the question, just want to highlight to our audience today is that we just concluded our annual investment outlook last month. And with that, we have published our first white paper on Mega Trends report, and the first part is already out on our website. We probably share with you the links later on during the conversation itself. So Damo, could you actually share with us a little bit of some of the key points from this Mega Trends report that we have published, just recently as well?
Sure. I guess the idea of mega trend, I mean, you might have heard of it in the mass media. But if you haven't, basically mega trend as a concept is that there are some trends that are going to impact us for the next 10, 20, 30 years that is happening, right? So this are what we call mega trends, things that are big and important that will change our lives for the next decades. And that's really what we call mega trend. A lot of mega trend discussion out there tends to look at it in big picture on a global basis. Our report basically look at it from an Asian lens because we believe, one, obviously this is where we are. Two, Asia is becoming the epicenter of a lot of the mega trends. For example, the first part of our report really talked about changing demographics, right? The demographics is changing in a lot of places, especially in Europe or Japan. People talk about aging population, right? In Asia, we look at it from the lens of Asia, and we say, hang on, there are two different trends that's happening. We are aging, or some part of us are aging, but some part of us are getting younger, right? Population growth is still happening, and because of that, the population is getting younger. Think about India, think about Vietnam, think about Indonesia. Whereas if you look at aging, it's really like Singapore or China is actually aging quite fast as well. So there's this two opposing trends or two counter trends that's at work in Asia, right? So that's where we think that our report is slightly different and makes it a bit more interesting. Have a look at it. The first part of it is really about changing demographics. I won't tell you what are the second and third part. Go read the report. I think we gave a teaser. What are the other two mega trends that we are looking at, and how Asia really fits into that mega trends, and what is the implication for investments as a result of this mega trends, right? So imagine, you can think about it. People are looking for, on the aging side, people will be looking for more services. People will be looking for more convenience. Things like OH care will become more important. Medicine or healthcare will become more important, right? Back to you, Roger.
Hey, thanks, Damo. Thanks for just highlighting a few key points, and I'm sure everybody after this webinar, do check out the website. I think the link has been posted. It'll go through it. The report is already up on the website. So thank you, Damo, for all the valuable insights today. So let's move on to the final poll of the question, or final poll question of the day. What do you look out for actually when you start to invest with robo-advisors? Thanks everyone for running through it. So I guess performance speaks louder than everything else. It seems like everybody is, well, about 60% of you guys in the audience today are looking at the performance. So we'll take note of that, notwithstanding the fact that there are still a couple of audience today, right, are looking at the fees as well. So thanks for sharing. So without further ado, let's quickly run through in terms of the key features. I guess most of you are not aware of the Robo-Invest product itself. Probably just quickly run through in terms of what the key features are. So if you look at this slide itself, right, once you have actually invested into, or rather once you have opened an account with Robo-Invest, right, what are the key features that you should be looking out for? And these are the 5 key features that we think are important for our Robo-Invest clients. So the first up will actually be how to check my portfolio and of course the fund holdings. So if for those that are not aware, Robo-Invest is actually one of the many features that the Dash app is actually having right now. So if you launch the Dash app, within the second row, the second button on the left, right, is actually invest. So the moment you tap on to invest, that's how you go through the account opening process. So let's not go through the account opening process today, but once you complete it and you started investing, right, the first screen that you'll be looking at is actually on the left itself. That is our dashboard. So this dashboard itself will show you what is the portfolio invested in, what is the current value. It will be looking at probably the top up, the withdrawal features as well, and also the performance. So if I were to go into the holdings itself, right, basically you tap onto top portfolio, you tap onto holdings. That's where you can actually see the breakdown of the selection of the cash, the bonds ETF that we have, the equities ETF that we have as well. If you will notice, there's a little big box over there to say that equities over there, right? So you can actually slide it. It's actually a slider whereby you can slide left and right to check the rest of the asset classes. And if you are keen on one of the particular ETF that we are showing right here, you can click onto the details. That's where the next screen will show you, which is actually the breakdown of the ETF itself that you have bought. And in terms of the cost, the value, the unrealized P&L, which is profit and loss that you're looking at. And if you really want to go into further details of that particular ETF itself, what you need to do is that you just click on to read more. That's where the last screen will actually show up. That's actually the fact sheet of the ETF itself. So these fact sheets are actually produced by all the ETF issuers. In this case, it's actually Vanguard. So that would actually be the standard and the standardized ETF product fact sheet that Vanguard will produce. So this is roughly a very simple process for our users. To keep it simple, you just tap on the portfolio, you see the holdings breakdown. If you want to go into further details of each ETF that we have invested in, what you need to do is just click onto the details. You will see the breakdown of the invested amount, the unrealized P&L at individual ETF level. So that will actually give you a good sense in terms of which ETF are performing and probably which ETF are underperforming as well. And the next step would be actually to see the actual fact sheet that's produced by the ETF issuer. So next slide. So I think we talk about the risk and the volatility that what a robo advisor has to go through as well. So I think Damo has brought out a very good point in terms of our CMAs and you know, our assumptions and all that. So as a user itself, right, the journey itself is such that you have to go through a risk assessment. So once that risk assessment is done, which is a simple questionnaire that you answer in terms of where you're looking for, from in terms of time horizon, in terms of how much risk you can assess as well. So once that is decided, in this case on the screen right now, you will see that, you know, it's a very aggressive client. You will notice that this is my risk profile, and this is that will be attributed to the particular portfolio that will be invested in. So if you were to see and you think that, you know, you are looking at changing the portfolios and the risk assessment, and these are some of the steps you go through. So for the benefit of the audience today, they have not really, you know, touched on Robo-Invest. So Robo-Invest itself, we have two portfolios mainly. One that is a global portfolio and one that is a global impact portfolio. The main difference is that the global impact portfolio have the ESG considerations. So I guess right now in this time and age, right, people are very well aware of what ESG is all about. So from an ESG standpoint, this portfolio actually invested into some of the ESG ETF that we can actually look out for. So if you are going to a very aggressive global impact portfolio like what the screen is showing right now, that portfolio actually, the underlying actually will have ETFs that are invested with ESG consideration. So just, you know, take note of that. So if you are really invested and you feel that you want to change the portfolio, right, or even to change the risk assessment, that's how you could do it. So if you look at the second screen, or rather the first screen, right, there's a change portfolio. Once you tap onto that, that will bring you to the next screen, and that's where you can adjust and change in terms of which portfolio you are going for. Next. Yeah, so over here, right, the next one is actually the risk assessment. So back to the first screen, which is actually the dashboard, you will notice that at the bottom of the page, that states your risk profile, which is currently very aggressive. Once you tap onto it, the next screen shows you the details of your portfolio, or rather your risk profile, to let you know what exactly, you know, what does it mean by a very aggressive risk profile. And if you wish to, you can actually retake the risk assessment. But a note to caution is that we don't really, you know, kind of recommend clients to change their risk profile, because whichever in a sense, right, whichever risk profile you are being assigned in a sense based on the questionnaire, right, you still get to choose which is actually which portfolio you are going into. So let's say if you are a very aggressive portfolio risk assessment, right, and if you decided that, hey, no, I think I'm a little bit more cautious, I want to take a more conservative stance, right, you can actually select a balanced portfolio, even though your risk profile is actually very aggressive. So it doesn't mean that by going on to a very aggressive risk profile, you need to abide by that and you have to choose that very aggressive portfolio in that sense. So just take note of that as well. So let's moving on to the third key point. How do you actually make a top up or a withdrawal? So again, back to the dashboard itself, right, you will see that there are two buttons over there, which is a top up and a withdrawal. So if I were to go through the different steps of the journey, if you tap onto top up, that's where you will see two options over there, which is a bank account top up or a scan and pay. So bank account top up actually is via through eNets. So what you will do is that once you tap onto that, you will key the amount, they will launch a browser onto your app itself that will lead you to the internet banking page that you are using. So whether it's DBS, OCBC, and the rest, right, that will go through the iBanking page in terms of setting up. But for the purpose of this presentation, let's go through the scan and pay. So once you tap on to scan and pay, you will see that the amount is over there. For example, $100, you can key in. Once you click on to next, the next step is that you can actually save this onto your photos. What you need to do next is that you launch your IB banking app. There will be a scan and pay. The moment you click onto scan and pay, you know that they will ask you probably a question is whether do I use your photos saved in my library. Tap onto that, you upload that particular QR code that you have saved, and then the payment goes through. So we are trying to make it as seamless as possible. And I guess in this time of and in this time and age, right, everybody is quite familiar in terms of using Pay Now and using scan and pay method as well. The other point that I want to highlight is actually withdrawal. So probably the other page is actually, if you notice that, you know, after invested and you think that, you know, I've made certain profits, or you think that, you know, the market has, you know, turned a little bit more volatile, or decided to withdraw some money, right? What you need to do is that you can click on to withdraw. Then after that, there will be a bank account. You follow through the steps as well. You indicate the withdrawal amount that you wish to, and then you can follow the steps. That's how the withdrawal process will take in as well. We do have a full suite of FAQ on the website as well. whereby you can actually go through and understand a little bit how the whole withdrawal process or how the whole top-up process actually works, and also the duration of it as well. So feature number 4, how do I track my transaction history? So just going back to the dashboard again, which is the starting point for most of our instructions over here, right? So on the left is actually dashboard. On the right, you can see there's a transactions tab. Tap onto that. That will bring you the full page of where the transactions have taken place. We have SGD and we have USD as well. Just case in point is that why is it there's USD involved is because most of the ETFs are actually traded in the US. You will notice that, for example, the previous example that I brought up, which is the Vanguard US REIT ETF itself, that is traded in the US. Hence, the underlying currency is also in USD as well. So there will be certain FX taken into consideration. So with here, right, this transaction history will show you the exact breakdown of details of when do you buy it, how much are you going in terms of FX as well, in terms of deposit and in terms of withdrawal. Next, going into the 5th feature of the day, right, is that how do I view and download my monthly statement? So starting point again, going back to the dashboard, you will see that there are 3 dots, on the top right hand corner. Once you tap onto it, that actually loads up the more options tab over there. So one of the first options that you see is actually statements. Tap onto it, you will see the monthly statement over there. Again, you tap onto it, you will see a breakdown of all what you need to do is that once you tap onto that statement itself, right, you need to have an in-app PDF viewer onto your mobile phone. Only then you can make use of the in-app PDF viewer to view the statements itself. Likewise for the tax invoices as well. If you tap onto the tax invoices, all the tax invoices will be in PDF copy as well. Yep, so I've kind of finished my presentation in terms of some of the key features that we have highlighted, if you are Robo-Invest clients. And the best part is from the earlier poll question that we have, right? We noticed that there are majority of the crowd today are not existing UOB AM Robo-Invest clients. So what's the best time to look at it is that we are running a promotion right now. So this current promotion is such that we have started actually in just before CNY, and we have about a week or so to go before the end of this month. That will be the expiry date itself. So you can actually get a free gold coin from our Singapore Mint that is worth $160 when you top up a minimum of $8,888 of fresh funds, and it's only limited to our first 50 UOB AM Robo-Invest users. And just FYI to the crowd today, we do have stock available. We have not given out everything, so make good use of this chance as well. Or alternatively, right, you can actually top up fresh funds of minimum $500 and maintain an account for 90 days to get $20 worth of credits into your UOB AM Robo-Invest account, or $1,000 dash, or beg your pardon, 1,000 dash rewards points for Singtel Mobile clients as well. So this is the existing promo that we have. If you want, there's a QR code on the right. You can scan the QR code and then you can try out the UOB AM Robo-Invest app. So just before we go into the Q&A session, right, I just wanted to highlight a little bit, at the start of the presentation, I talked about UOB AM being, in the industry for a long while, and we are multi, award-winning asset manager as well. So just some of the key points on why do you want to invest with us. So we are a trusted asset manager for more than 30 years. We have institutional fund management expertise at your fingertips. And again, our customized investing is driven by technology. That's what Damo has shared in terms of our proprietary CMAs as well. So next. And more importantly, what is our purpose at UOB Asset Management? So our purpose is actually to create value for our investors, partners, and communities, and to help them to achieve their goals and aspirations as well. And our vision is to be a trusted asset manager in Asia, leading in innovation and sustainability as well. Next. So in terms of our strength and stability and skill, right, for those who are unsure about who exactly is UOB Asset Management and where we are right now, right, so we have offices, in Asia itself. We have about almost 30 years of investment experience. We have 10 markets in Asia. And like what I shared earlier, we're managing more than 38 billion assets under management as of end September 2021. And lastly, we have won more than 200 awards since 1986 as well. Next. These are some of the accolades that we have won in Asia over the past few years. Next. Yeah, so I guess we have come to the end of the session itself, and I just want to run through the Q&A. Amy?
Yes, hi, thank you. Let's run through Thanks, Damo and Roger, for presenting. Let's quickly go through the Q&As. We have in total about 15 questions. So I'll just quickly run through them. And just in case if any of the questions are not being able to answer in terms of interest of time, don't worry, we'll come back to you via email with the answers. All right. And also my colleagues will probably answer it through the Q&A box as well. Now, the first question, maybe I'll direct it to Damo. So this gentleman or lady, the audience, is saying that, hi, how can a robo-advisor be a starting point for new investors who has a lump sum and wish to start investing today? Damo?
Great, thanks, Amy. Yeah, I guess this is the robo-invest or the robo-advisor is probably one of the best way to start investing, because you may not know what to invest, right? So you may not know whether you should be buying stocks, you should be buying bonds, or whether what stocks or what bonds to buy. A robo-advisor or UOBAM Robo-Invest basically allows you to diversify your investment right from the start. So even though you might not have a lot of money, I don't know how big your lump sum you're talking about, but imagine that if you need to do that, usually what happens is that you have to go to a private bank, where the private banker basically tell you, Mr. So-and-so, we think you should invest in US equities, in Asian equities, buy some US government bonds and things like that. And each piece, you probably need to have several hundred thousand, if not millions of dollars of asset to start with. And each piece actually would really be, you need to commit a fairly substantial amount of money to invest, right? Whereas the robo-advisor, our robo-advisor starts at $1 if you wish, but obviously most people actually put in several hundred or a couple of thousand of dollars, and we basically allocate it across various asset classes, so that we construct a very well diversified portfolio for you based on your risk profile, meaning how much risk are you prepared to take, right? So if you are an aggressive investor, it may be more like close to 100% in equities. Whereas if you say, look, I cannot stomach that sort of volatility. I mean, think of it. In January, the market fell 10%. Would you be able to sleep if your portfolio dropped 10%, right? If you're not the type of investors, we will tell you, okay, maybe your portfolio should have a 50% equities and 50% fixed income, right? Just to give you a rough idea, in our portfolio, in January, we saw somewhere between 2% loss to 6% loss simply because the market was down so heavily. But we've sort of controlled that loss to about between 2 to 6% for our investors. And if you are the type that says, I cannot even stomach 5% loss, maybe you should have a portfolio that is nearer the 2% loss kind of situation. So that's how I think robo-advisors and UOBAM Robo-Invest can help a new investor start on their investment journey, right? It gives you a well-diversified portfolio. It's customized to your risk profile.
Thank you, Damo. I think I can sleep better after hearing your answer. Thank you. So, all right. And the second question that we have, maybe I'll direct it to Roger. And our audience here say after investing with UOBAM Robo-Invest, how often should I follow up on my performance? Is there any tools or tips that I can use, or perhaps any tools or materials that you can offer to the audience? Over to you, Roger.
Yeah, hi, Amy. Yeah, thanks. So I guess the rule of thumb is that, if you are invested into a robo-advisor, right, technically you should let the robo-advisor do the job for you. So from that standpoint, right, to be honest, I wouldn't really recommend our users, right, to be logging into their app on a daily basis, because that will actually create a little bit of anxiety. So like what Damo have shared, right, in terms of how the markets have performed, especially in the first couple of months, right, of this year, you will feel the anxiety and probably you are a little bit, unsure of how this will pans out to be. So my suggestion is that probably in terms of the tracking of the investments and whatnot, probably on a weekly basis, I would guess, or even so on the monthly basis as well. In terms of the tools and the features or the materials that you can leverage up, right? So I just now what I mentioned is that I shared, the mega trends report. In terms of our website, UOB Asset Management website itself, we do have quite a number of research reports over there where we have highlighted some of the key markets trends, some of the key sustainability investments as well. And from there, right, you probably have a good understanding in terms of the overall broader macro economic outlook as well. And as for more bite-sized, materials, which our audience probably will be a bit more appreciative, right? We are actually in the process of sending out, various EDMs to our clients as well, to let them know, how do we actually concise the overall, the big picture of the research note itself that we have published on UOB Asset Management website, and then we concise them into 4 to 5 points. From there, then we can actually share this with our users. And then looking at the 4 to 5 points, right, I think that will be a very good starting point in terms of knowing how the market has performed, knowing your portfolio is well taken care of. And then that will actually allay the fears whereby you need to check the app on a daily basis and try to reduce the reliance on, looking at it, because this is unlike, stocks trading whereby you need to look at it from almost on a daily basis and even within a day a few times. But from a robo-advisory standpoint, and if you are invested in a robo-advisor, like what Damo has shared, I'm of the camp whereby you don't need to look at it on a daily basis, but probably on a weekly basis when you're just starting out. Yeah.
Okay, thanks, Roger.
Sorry,
yes.
if I may jump in here, I think a few tips that we usually advise new investor is, one is to do dollar averaging, meaning that have a regular contribution plan or have a regular contribution to your portfolio, right? So whether it's up market, down market, you invest a regular amount, a fixed amount regularly. So what it does is that it averages the cost of your portfolio. That's why we call it dollar cost averaging. And it has a benefit that when market is down, you're actually buying more units, whereas when market's up, you're probably buying a bit less units. And that basically would deliver typically much better results because there's much less emotions involved in investing in your portfolio. If you are a little more aggressive, and I know that people who are more savvy basically take opportunities of market sell-off to really contribute, then really basically that's when they think that market corrections are good time to buy on dips, and then they basically do a contribution when you see a market correction. That's really if you're a bit more savvy and you're a bit more aggressive in your investment stance.
Thanks, Damo. I like the concept about the dollar cost averaging. And I think you have also answered one of our audience question about should we go in monthly or lump sum? So from this Shi Wang Lim. So I think you have nicely answered that, dollar cost averaging. Okay, so another question I have here, either one of you can answer. Would there be the ability to build my own sandwich for the portfolios, meaning I can choose my own percentage allocation to each asset class available in your platform?
The quick answer or the short answer is no. Basically, what we allow you to change currently is that your risk profile, meaning that if you don't like the allocation because you look at the portfolio and says, this is really too conservative a portfolio, I want to increase the risk tolerance of this portfolio. With that, we recalibrate that portfolio into another allocation, but we don't allow for pick and choose because our concern is that clients might actually end up with a portfolio that is suboptimal. I think if you remember the efficient frontier, right? We are worried that clients may choose a suboptimal portfolio. So what we do is that you can change the risk profile that results in a different portfolio. It may result in one that takes on more risk or less risk, depending on which way you tweak it. but we don't allow for really pick and choose in terms of the funds that you want.
Okay. We have another question here. Do you share the CMA? Appreciate that the forward-looking may be sensitive, even though many global fund managers publish their CMAs annually, quarterly.
No, unfortunately, we don't share our CMAs. We think that that's proprietary. We use it for our own purposes. Obviously, when we do any clients pitch to institutional clients, that CMA becomes something that we use to project the return for any portfolio that we recommend, but we don't publish those numbers officially.
Right. Okay. Go to the next question. So what is the criteria for your ESG portfolio? How ESG are your ESG investments?
Okay. So basically, on our ESG, it depends on whether we are talking about funds or ETFs that we use. In the fund side, obviously we look, the funds that we use integrate ESG screening in the stock selection, right? So or bond selection. So that's how we look at the ESG. And basically, there's a criteria and that says that the portfolio obviously cannot invest in companies that are what we call D-rated. That means don't fail the ESG standard, and they are allowed only up. The investment must be at least C-rated, meaning that they must at least have a passing grade on the ESG. So that's on the fund side. On the ETF side, basically for most ETF, the methodology tends to be more quantitative. So it basically relies on ESG rating from some of the ESG data provider like MSCI. And basically the ETF we select would have incorporated this of ESG rating or ESG data and ESG screening in the portfolio itself.
Okay, thanks, Damo. We have also another question here. So what is the main difference as compared to the Grab Invest, which is also with UOB?
Yeah, probably Damo, I'll take this question instead. So probably the simple answer is that for Grab Invest itself, right, they are all invested into the money market funds and the short duration funds as well. So that is not set up as a portfolio per se, whereby there will be equities, ETFs, and also fixed income ETF per se. So Grab Invest itself, I myself is also a Grab user as well. So when I'm looking at the Grab Invest product itself, right, theirs is actually a pool of monies invested into a particular fund. And obviously from that standpoint, that fund is actually managed by UOB Asset Management. So if you are a Grab user and then you choose to go into Grab Invest, right, you are actually just putting the money, getting a higher yield, for example, into one of the UOB asset management funds that we are managing right now. And then that's all. And the asset class that are going in actually are the money market funds, the short duration bond funds as well. So there's no exposure in terms of going into the equity markets, which is quite different from Robo-Invest today. So Robo-Invest, we are invested in both equities and fixed income. Allocation is determined by your risk assessment and also the algorithm as well. So that's actually the main difference between the two products. Yeah.
Thank you, Roger. Can you also, Roger, answer this question as to what are the fees and how liquid is it? For example, sell day one and get the fund on day three.
Okay, so unfortunately, we don't really sell on day one itself, and then we are you don't sell on day one and then you receive the monies on the third day itself. So we do cover that onto our website as well. So if you were to refer to our website, and then there's a simple FAQ over there, right? We did state that in terms of the duration and in terms of the withdrawals, right, we are taking about probably about 3 business days onwards, so about 6 business days. Yeah, so that is where once you're invested, if you sell, let's say today is actually Thursday itself, you probably need about 4 to 6 business working days before you actually get to see the money going into your bank account. So in terms of the fees, So for the first 25,000 invested with us, the annual fee is actually 0.8% per annum. If you are going above 25,000 invested with us, the annual fees is actually 0.6% per annum. Yeah.
Okay. So I think I'll end up, we still have a few more questions, but we probably will have to go back to answer them via email in the interest of time. But let's have the last question. Okay. So the last question is, what is the past performance of respective portfolio? Damo?
This portfolio is relatively short. We just launched it in December last year, and as you remember, December was probably a bit volatile, but January we actually saw a sell-off in the market. So roughly speaking, in January, I think most clients would have experienced somewhere between 2% decline to about 6% decline, depending on how aggressive your portfolio is, right? That's our experience. It's about 6 to 7% decline. That would, roughly speaking, be the max that you should have experienced. But if you look at our own UOB AM Invest, which has a longer track record, because obviously we launched it much earlier. Last year, the performance for the most aggressive portfolio was about 16%. For the most conservative portfolio last year, the return was about 2.8%, so call it about 3%. So roughly speaking, it ranges from about 3% to about 16% last year. But this year, January itself, I think the impact was that the market really did sell off quite hard. We've been trying to minimize that impact, but most portfolios will still have lost somewhere between 2 to 6% in terms of the portfolio.
Okay, thank you, Damo. Thank you, Roger. For the remaining questions, I'll come back to you with the email answers. And we would like to thank all. We shall end these sessions today in the interest of time, and it's taking up your lunch time. So thank you for attending today's webinar. The next one will be the fireside chat with Damo on market insights, scheduled in March. Do look out for the invite and join us in the next webinar. And over there, you could also ask us questions as well. So, and also we value your feedback very much so that we can improve and bring you a valuable webinars in future. So please scan the QR code with your phone to access the feedback form, or click the feedback link available in the chat box. Yeah, and thank you and have an awesome day. Stay safe and goodbye.
Thanks everyone. Goodbye.
Thanks everyone. Goodbye.